Hey, what is up, guys? This is Kenny, Senior Research Analyst with the MiniAnalyst.com. The first thing we're going to look at here is a chart of the market. This is the Mini S&P 500 futures contract, front month in nature, the December contract, looking at the last trade, a last print of 27.35, as we've had a pretty precipitous fall of around 250 points in the S&P 500. So, as you know, if you've been following these videos, as the market, we actually went to neutral at 27.92.25. We'll zoom out a little bit here, and as you can see, we'd actually gone to neutral around the same area. This was a pretty strong level of resistance, even though the massive level of support resistance was actually around 27.25 to 27.50. When we had these errant moves up to this horizontal level of resistance, we definitely went to neutrality. We booked some gains. This was on the MADSC and the OMT. MADSC trades off the OMT. So, official market timing, obviously OMT. And so when we had this move higher, to break above that, we just weren't buying into it. We didn't really feel like it had legs. We thought that we would just retest the early year highs and then come back down for a potential buying opportunity. That's what we had been espousing for the last several weeks and months, as we had broken above this level, retested, and moved higher to retest or to hit 2,900. Now, the market looked just like it was clear sailing, had broken above 2,900, had come back and retested, but we still were not buying into the move even here. After the retest and the handle of a cup and handle, just did not buy into it, and lo and behold, we had mentioned that we were still looking for a pullback as an opportunity to get bullish, and lo and behold, we did get that market move lower right down to our massive level of support resistance. And one of the things that we kept mentioning was that the bearish volume was always whenever the market was up, the volume was down. Whenever the market was down, the volume was up, as you can see in this chart. And we just knew that was an indication that, along with the potential errant price technicals, not really kind of being a fake out. We actually had mentioned that the ES oftentimes will fake the market out. They want to attract as many buyers as possible, and then lo and behold, they all become sellers and short sellers. So we got this nice dead cat bounce right here. Anyone that bought into that definitely felt a little bit of pain as we went back, and actually we went to OMT bullish, as you can see right here. Once the market bounced back and we came right back down to retest the be-all, end-all of trend following significance and the convergence and confluence of the 200 SMA and 200 period EMA, we definitely wanted to go bullish coming off the retest of the 10 periods, as we retest the 200, the long-term measures of trend following significance. And so we went to bullish, went to OMT bullish. In fact, we sent out a DSC trade to buy in the DSC portfolio, 27.7250. That was our move to the bullish side, and lo and behold, that our stop was 26.90. 26.90. That was on 10/19/244 in the afternoon. So last Monday, not this Monday just passed. Today is Wednesday, the 24th day of October, and so we went bullish, and we hit a MADSC long. Well, what are you going to do? We came down to 26.92. Yeah, I can see it better right there. 26.91.28. The actual low was, you can't really see it on this, 26.92.25, within 2 points of our stop on the DSC trade that you see right there. And so what do? Well, you add to your exposure. If you're convicted in your position, you add to your exposure. So what do? We bought again in the DSC, 27.01, now a stop of 26.70. And so the market's up to a nice 27. Let's see, where did it close yesterday? We can actually pull it up. Oh, I know where it is. Right over here. There we go. So that's the MADSCDT. And we'll go ahead and switch over to MADSC. So market closed at yesterday at 46.25. We're actually up on the position that really was off to a pretty bad start as we had this move lower, this penetrative move lower. But as of the close yesterday, this position was down markedly, and bought some more at 27.01 for a $2,232 gain on that per contract, which is about 30% or so on a $6,000 initial margin, and a loss of $1,300 there, so up about $1,000 on the position for the, and as you can see the chart, you definitely want to take advantage of pullbacks. It's very difficult to buy here on these moves higher, but anytime you see a pullback, that's when you want to add to exposure, just like we did yesterday as the market had pulled back. Now, having said that, even though we are officially bullish, we had mentioned for months that we were looking for a pullback to get back into the bullish side of things. After being neutral since July. So we're back to bullish. We're going to wait and see what happens here. It looks a little dicey. I'm going to be honest. One would expect an October low, buy the October low, and you have a nice move higher. But let's take a look at the intraday dynamics. And as you can see, even today, we started out a little bullish. It's turning a little bearish, below the trend, 2750. So one would argue that we'll chop around this massive level of support, horizontal support resistance that we've used pretty much the entire of the year as our key measure of technical resistance. So we're going to chop around 2700, 2750 in all likelihood, but this retest is exactly what you look for. This retest of 2700, the fake out move below for a move higher. So we're going to go ahead and hold to bullish for now. So how have the portfolios done? Well, wow. As you know, we showed the platinum up until October 9th. We just happened to show the platinum through October 9th, which are about 8 of almost all of our trading methodologies. Maybe about 8 of 11 or 12 or so, essentially. And so you see, for the year, the platinum was down, maximum drawdown 18%, and the return was 63% for the year. And I believe we did the S&P. I don't know what I did with that. I believe we did the S&P numbers. We can probably look at the... we did not put it there. There it is. So we talked about the S&P, actually. And of course, this is... no, this is about the same. This is about the same. So we did the S&P, and we had a reward to risk ratio of 0.23. So the reward was 77 points on the S&P, and the risk was 340 points for a reward to risk ratio of 0.23. And whereas the platinum portfolio, the max drawdown was 12% for the S&P 500 this year. The platinum portfolio this year has had a maximum risk of 18%, so a little bit more risk, but a 63% reward on, and so the return for the market was 2.89%. Obviously, it's down now, I believe. So the reward for the was 2.89%. for the S&P at 2750. We're now at about 27.4. So I guess we're up a little bit on the S&Ps. Well, there you go, 2673 is where the S&Ps began the market. So as long as we stay above that, more indication that 2700 is a key level of support and resistance. But there's the market, so that's the platinum. So what are you going to do? If you guys want to take advantage of trading the platinum, you can certainly do so. You can receive the trades via email, via text message to your phone. You can trade around the trades. You can have them auto-traded to the broker, however you want to do it. But the market here looks pretty nasty, to be honest. So we'll see, what the technicals do and what comes to fruition. But right now, it looks pretty nasty. We have the Marty, which... we've actually broken out Marty from Marty S. So you have the Marty here, beautiful, 106,002 profit factor, 77 max drawdown. But the Marty S is the real key. So we've broken out the Marty S and made it a little better for a profit factor of 3 and 72. This goes back to 06. And there you see the Marty S, just wanted to be able to, Marty S is for short, obviously, and it really takes advantage of short setups in the market when we have bad years. In fact, you'll look at the periodical returns. 2008 was one of the best years, $26,000 of the gains. 2011, another down year, I remember it very well. 23, I had a 20% drawdown that year. And 23,000 was the gain for Marty S in 2011. Then 2015, another choppy year, 6,800. And then it just goes kind of quiet as the Marty takes over on the long side, and then so far this year, $8,000 has been the gain for Marty S. So it really takes advantage of the short opportunities. So anytime we expect the market to be going lower, we definitely look to embolden Marty S, and we just made it just a little better. So what else has been going on? Well, the doubler, beautiful trade at a green dot. There you have performance graphs at a green dot on the doubler, as you can see there. What else has been going on? Boost got clocked for some losses, as you would expect, but did it really? I mean, you're going to have losses in trading, especially when you make $500,000 in 10 years on a maximum drawdown of $38,000. So again, you want to take advantage, like we mentioned here on this pullback. You want to take advantage of these pullbacks for the subsequent move higher. Krypton, beautiful green dot in kind of a loss, but really got a beautiful entry on the long side for the Krypton. Crypto, couple of errant losses, still very near the highs on the equity curve. Let's see, Maine. Not really much going on there. What's interesting is the Select got rocked for some Select rarely trades. In fact, going all the way back 8 years, it had maybe 1-2 small losses, but it got clocked for probably its biggest loss there is. And then you have Macemo, beautiful, going back to I guess 03, 04. Not actually in a trade. Macemo not actually in a trade. So definitely staying out of things here. We've got the, let's see, Mace got clocked for a couple of losses. HW, nothing yet. System 1.0, beautiful. This system was developed in 2002 and still just handling this pullback like a champ. So if you want to trade and have your equity portfolio, your equity curve at a new high when the market itself, that's an interesting, let's go ahead and look at go ahead and talk about AI 2 buys and along. AI, the actual AI is staying out of things, but if you want to go to if you want to have your portfolio at an equity high, then you can have, or if you like this, so this is just a buy and hold. This is just buy and hold, MABH. This is buy and hold. This is what the S&P has done since 1970. This was the dot-com bust. This was the housing bust. And now we've gotten overextended a little bit to the upside. But as you can see, this was that 2015 pullback. I believe this was the 2011 pullback that we just talked about, 11, 15, 8, and 2000. This was the market crash of 1987, to give you an idea of how far we've come. That was Black Monday in 1987. And it's almost funny to look at now, but this isn't a logarithmic chart. So, but if you want these errant moves to the downside, that's what you get with your long-term 401ks, IRAs, etc., etc. And obviously we can trade IRAs as well to MiniAnalyst.com, and or you can get, let's see, that has you just bought and held, you would have made $265,000. Your risk would be $90,000. Or MA's BH, you would have made another $50,000 on the same risk of $93,000, peak to valley. $30,000 the account size required, 5 profit factor, 4.51, and this is also going back 47 years. And you'll have a much smoother equity curve over those 47 years or so. So the point is, if you want to just buy and hold, or you want to weather the storms, by all means, go ahead and do that with the majority of your portfolio. What we do at the MiniAnalyst.com is we work with 10 to 20% of your total portfolio. 2008 was one of our best years ever. Our clients made between 300 and 500%. So what happens is, when we have these market corrections, and the reason I'm talking about this is it just really seems like we're going to have another nasty correction like '08, like 2000. We're just overdue. Until it happens, we're going to assume it's not going to happen, but we have to be ready, and that's where the MiniAnalyst.com comes into play. Is if you look at the just look at this right here. If you look through the '08 busts and all that, if you want to make money while actually make money during those time periods, then your 401k, which in '08 turned into a 201k, but a lot of our clients had 301ks, still even 401ks whole, just using 20% of their total portfolio in what we do. So if you guys have any questions, hope this helps you understand the market a little better and what we do a little better. If you have any questions, feel free to go to the website and chat with Support Team live through the live chat, or shoot us an email to admin@MiniAnalyst.com. But it really, definitely, did we even look at so we looked at the grand scheme of things. This is the monthly chart of the S&P, and so we have a long way to go, around 2300, just to correct some of this move, 1800 to 2800. So we're definitely kind of looking for at least a move to 23, we would say 23 to 2400. And so what's your portfolio going to do during that period? And we've got these Chinese tariffs coming on. I mean, that's kind of a big deal. So we will see you. I hope you guys have a great week and a great weekend, and we'll see you next week.